Millionaire Careers, written and published by Rich Audiobooks. Not all jobs are created equal. Some are built to pay the bills, others are built to build empires. Behind every self-made millionaire is a career choice that opened doors to wealth, freedom, and legacy. These 12 professions aren't just about income. They're about long-term potential, scalability, and positioning yourself where money flows. If you're serious about becoming rich for life, start by choosing a career that makes it possible. Lesson 1. Tech Entrepreneur: Building Digital Empires. The modern tech entrepreneur stands at the intersection of innovation and unprecedented wealth creation potential. Unlike traditional business paths that might take decades to build substantial wealth, the digital economy has created opportunities for rapid scaling and exponential growth that can transform a clever idea into a billion-dollar enterprise within years. Today's tech landscape offers numerous entry points for aspiring entrepreneurs. Artificial intelligence, blockchain technology, green tech, and biotechnology represent just a few of the sectors where innovative solutions can capture massive market value. These fields aren't just trending topics, they're reshaping entire industries and creating new ones, offering entrepreneurs the chance to solve significant problems while building substantial wealth. The journey of a tech entrepreneur typically begins with identifying a meaningful problem that technology can solve efficiently. Consider Brian Armstrong, who recognized the complexity of cryptocurrency trading and created Coinbase, or Whitney Wolfe Herd, who reimagined dating apps with Bumble. These entrepreneurs didn't necessarily have deep technical backgrounds, but they understood market needs and leveraged technology to address them. What makes tech entrepreneurship particularly attractive is its relatively low barrier to entry compared to traditional businesses. With cloud computing, open-source software, and no-code tools, launching a tech startup requires far less capital than building a factory or opening a retail chain. This accessibility, combined with the potential for rapid scaling through digital distribution, creates opportunities for entrepreneurs from diverse backgrounds to succeed. However, the path demands more than just a good idea. Successful tech entrepreneurs must develop a unique blend of skills: strategic thinking, product development insight, leadership capability, and most importantly, the ability to adapt quickly as technology evolves. They need to understand their market deeply, build and motivate high-performing teams, and make difficult decisions under uncertainty. Funding plays a crucial role in tech entrepreneurship. While bootstrapping remains viable for some businesses, venture capital has become a powerful accelerant for growth. The key is understanding when and how to raise capital. Early-stage funding often comes from angel investors who invest in exchange for equity, followed by venture capital firms that can provide larger amounts of capital along with strategic guidance and valuable network. The most successful tech entrepreneurs think beyond immediate product features to envision how their solution can transform into a platform or ecosystem. Take Stripe's founders, who expanded from simple payment processing to building a comprehensive financial infrastructure platform. This platform thinking often leads to the most substantial wealth creation opportunities in tech entrepreneurship. Exit strategies represent another crucial aspect of tech entrepreneurship. While building a sustainable, profitable business is one path, many tech entrepreneurs aim for either an acquisition by a larger company or an initial public offering, IPO. Both routes can create significant wealth, but they require different approaches to business building and growth strategies. Risk management distinguishes successful tech entrepreneurs from those who flame out. While the media often celebrates overnight successes, behind most tech fortunes lies careful planning, strategic decision-making, and resilience through multiple setbacks. Successful entrepreneurs learn to balance bold vision with practical execution, knowing when to pivot and when to persist. The tech entrepreneurship landscape continues to evolve, with new opportunities emerging as technology advances. Areas like quantum computing, space technology, and the metaverse represent the next frontier for wealth creation. For those willing to embrace uncertainty, stay ahead of technological trends, and build solutions that create genuine value, tech entrepreneurship remains one of the most powerful vehicles for generating substantial wealth in the modern economy. Lesson 2. Real estate investor: Building generational wealth through property. Real estate investing has created more millionaires than perhaps any other profession, and for good reason. Property represents a tangible asset that appreciates over time while generating consistent cash flow through rental income. Unlike many other investment vehicles, real estate allows investors to use leverage, borrowing money to control assets worth far more than their initial investment. The beauty of real estate investing lies in its accessibility and scalability. Many successful investors start with a single residential property, often a small apartment or single-family home that they can manage themselves. This first investment serves as both a learning experience and a foundation for future expansion. The rental income covers the mortgage and expenses while building equity through principal paydown and market appreciation. As investors gain experience and equity, they can expand into different strategies that magnify returns. The BRRRR method, buy, renovate, rent, refinance, repeat, allows investors to recycle their initial capital into multiple properties. Fix and flip projects can generate substantial profits for those willing to manage renovations. Commercial properties, while requiring more capital and expertise, often yield higher returns through triple net leases and appreciation potential. The tax advantages of real estate investing are particularly compelling for high-income professionals. Depreciation deductions offset rental income, while 1031 exchanges allow investors to defer capital gains taxes by rolling profits into new properties. Strategic use of these tax benefits, combined with proper entity structuring, can help investors retain more of their profits and accelerate wealth building. Market selection plays a crucial role in real estate success. The most successful investors develop expertise in specific markets, understanding local economic drivers, population trends, and development patterns. They build networks of reliable contractors, property managers, and real estate agents. This local knowledge creates a competitive advantage and helps identify opportunities before they become obvious to others. Financing represents both an opportunity and a challenge in real estate investing. Traditional mortgages provide favorable terms for residential properties, but commercial financing often requires larger down payments and higher interest rates. Sophisticated investors leverage relationships with local banks, private lenders, and investment partners to access capital for larger deals. They understand how to structure deals creatively, using seller financing, master leases, or syndication to control properties with minimal personal capital. The transition from passive investor to active developer marks a significant milestone in many real estate careers. Development projects, while carrying higher risk, offer the potential for outsized returns through forced appreciation. Successful developers learn to navigate zoning regulations, manage construction projects, and create value through strategic property improvements or repositioning. Technology is transforming real estate investing, creating new opportunities and challenges. Online platforms enable fractional ownership of large properties, while property management software streamlines operations. Smart home technology and sustainable building practices are changing tenant expectations and creating opportunities for investors who adapt quickly. Understanding these trends helps investors stay competitive and identify emerging opportunities. Real estate investing rewards those who think long-term and build systems for sustainable growth. Successful investors typically maintain properties well, treat tenants fairly, and build strong relationships with service providers. They understand that each property represents not just an investment, but a business that requires attention to detail and professional management. This systematic approach, combined with patience and disciplined execution, creates wealth that can span generations. Moving from small residential properties to a diverse portfolio of income-producing assets requires dedication, continuous learning, and strategic thinking. The most successful real estate investors combine market knowledge with operational excellence and financial sophistication. They understand that real estate is not a get-rich-quick scheme, but rather a vehicle for building lasting wealth through careful acquisition, management, and optimization of property assets. Lesson 3. Finance or hedge fund manager, mastering the markets for massive wealth. The world of high finance remains one of the most reliable paths to substantial wealth creation, with hedge fund managers and financial leaders consistently ranking among the highest-paid professionals globally. This career path offers ambitious people the opportunity to generate wealth both through direct compensation and investment opportunities, often reaching into the millions or even billions of dollars for top performers. The journey typically begins with entry-level positions at investment banks, private equity firms, or established hedge funds. Many successful fund managers start as analysts, spending their early years mastering financial modeling, market analysis, and investment strategies. During this phase, professionals often earn substantial base salaries plus bonuses, but the real wealth-building potential emerges as they climb the ranks and gain more responsibility for investment decisions. Education plays a crucial role in this field, with most successful fund managers holding degrees from prestigious universities and advanced certifications like the CFA, Chartered Financial Analyst. However, academic credentials alone don't guarantee success. The most prosperous fund managers combine technical expertise with exceptional pattern recognition abilities, risk management skills, and an almost intuitive understanding of market psychology. The compensation structure in fund management is designed to reward performance dramatically. While base salaries might range from $200,000 (0 cents) to $500,000 (0 cents) for experienced managers, the real wealth comes from performance bonuses and carried interest. Top fund managers typically earn 2 and 20, a 2% management fee on assets under management, and 20% of profits generated. For a billion-dollar fund generating 15% returns, this could translate to tens of millions in annual income. Building the expertise to launch your own fund requires strategic career progression. Successful managers often spend 10-15 years working at established firms, building track records, and developing relationships with institutional investors. This period is crucial for understanding various investment strategies, from long-short equity to global macro approaches, and developing a unique investment philosophy that can attract capital. The network developed during these years becomes invaluable when launching an independent fund. Institutional investors, wealthy people, and family offices prefer investing with managers they know and trust. Many successful fund managers start with $50, 0 cents, 100 million in assets under management from their network, before expanding to broader investor bases. Technology has transformed fund management, creating new opportunities for wealth generation. Quantitative trading, artificial intelligence, and big data analytics are revolutionizing investment strategies. Forward-thinking fund managers who embrace these technologies often gain significant advantages in market analysis and execution, leading to superior returns and wealth accumulation. Risk management distinguishes exceptional fund managers from average ones. The ability to preserve capital during market downturns while capturing upside during bull markets requires sophisticated risk management frameworks. Successful managers implement robust systems for position sizing, leverage control, and portfolio diversification, ensuring sustainable long-term performance. Beyond technical skills, psychological fortitude is essential. The pressure of managing other people's money, especially during market volatility, can be intense. Successful fund managers develop emotional discipline, maintaining clear judgment whether markets are soaring or crashing. This mental strength often determines who survives and thrives in the industry. The path to becoming a wealthy fund manager also involves understanding the broader financial ecosystem. Relationships with prime brokers, administrators, compliance experts, and other service providers are crucial for running a successful fund. Many prosperous managers build teams of talented professionals, creating organizational structures that can manage billions in assets effectively. The finance and hedge fund management career path continues to evolve, with new opportunities emerging in areas like cryptocurrency, sustainable investing, and private credit. Successful managers stay ahead of these trends, adapting their strategies while maintaining disciplined investment processes. For those willing to commit to the demanding but rewarding journey, fund management remains one of the most direct routes to substantial wealth creation in the modern economy. Lesson 4. High-End Consultant, the Path to Premium Advisory. The world of high-end consulting represents one of the most accessible paths to seven-figure earnings for professionals with deep expertise and strong business acumen. Unlike careers requiring extensive capital investment or formal credentials, consulting success primarily depends on your ability to solve complex problems and deliver measurable value to clients willing to pay premium rates for transformative results. At its core, high-end consulting is about positioning yourself as an indispensable advisor in areas where businesses face critical challenges or opportunities. The most successful consultants typically focus on specialized niches, where their expertise can directly impact a company's bottom line, whether that's operational efficiency, digital transformation, market expansion, or organizational development. These consultants don't sell time, they sell outcomes that can generate millions in additional revenue or cost savings for their clients. The journey to becoming a high-end consultant often begins with building deep expertise in a specific industry or functional area. Many start their careers in prestigious firms like McKinsey, Bain, or BCG, while others gain their expertise through corporate roles or entrepreneurial ventures. The key is developing a unique perspective and methodology that sets you apart from generalist advisors. This might involve combining multiple disciplines, such as merging technology expertise with change management, or focusing on an emerging field where traditional consulting frameworks don't yet exist. Breaking into the high-event consulting market requires a strategic approach to positioning and pricing. Successful consultants understand that their fees must reflect the value they create rather than the time they spend. A single advisory engagement might range from $50,000, 0 cents, to $500,000, 0 cents or more, depending on the scope and potential impact. This value-based pricing model allows consultants to earn substantial income while working with a select number of high-caliber clients. Building a sustainable consulting practice requires more than just technical expertise. The highest-earning consultants excel at relationship building, thought leadership, and business development. They regularly publish insights, speak at industry events, and maintain strong networks that generate a steady stream of referrals. Many also develop proprietary frameworks or methodologies that can be licensed or packaged into training programs, creating additional revenue streams beyond direct client work. The path to scaling a consulting practice involves careful consideration of leverage points. Some consultants choose to remain boutique operators, maintaining high personal earnings while working with a limited client base. Others build firms by hiring and developing teams, creating systems and processes that allow them to serve more clients without sacrificing quality. The most successful consulting firms often evolve into hybrid businesses, combining advisory services with technology platforms, training programs, or product offerings. Technology has dramatically changed the consulting landscape, creating new opportunities for reach and scale. Virtual consulting platforms, online collaboration tools, and digital delivery models allow consultants to serve clients globally while maintaining lower overhead costs. Some consultants leverage these tools to create high-margin virtual practices that generate seven-figure incomes with minimal infrastructure or staff. The financial potential in high-extent consulting is virtually unlimited for those who can consistently deliver exceptional value. Top independent consultants regularly earn between $500,000, 0 cents, and $2 million, 0 cents annually, while founders of successful consulting firms can generate significantly more through equity ownership and profit sharing. The key to achieving these income levels lies in developing a clear value proposition, building a strong market presence, and creating systems that allow for scalable delivery of expertise. The most successful consultants approach their practice as entrepreneurs rather than service providers. They invest in building intellectual property, developing multiple revenue streams, and creating processes that maximize their impact while minimizing their personal time investment. This entrepreneurial mindset, combined with deep expertise and strong client relationships, positions high-end consulting as one of the most attractive paths to sustainable wealth creation in today's knowledge economy. Lesson 5. Plastic surgeon or specialist doctor, the art and business of elite medicine. The medical profession has long been associated with prestige and financial success, but certain specialties stand out for their exceptional earning potential. Plastic surgery and specialized medical practices represent some of the most lucrative paths within healthcare, offering practitioners the opportunity to build substantial wealth while making a significant impact on patients' lives. The journey to becoming a plastic surgeon or specialist physician requires an extraordinary commitment to education and training. After completing undergraduate studies, aspiring specialists face medical school, followed by a residency program that can last 5 to 7 years. For plastic surgeons, this often includes additional fellowship training in specific procedures or subspecialties. This extensive educational investment, while demanding both time and financial resources, creates a high barrier to entry that helps maintain the premium nature of these services. What makes plastic surgery particularly profitable is its unique position at the intersection of medical necessity and elective procedures. While insurance-based practices can face declining reimbursements and administrative burdens, cosmetic procedures operate on a cash basis, allowing physicians to set market-driven prices. Successful plastic surgeons often develop a reputation for specific procedures, whether it's facial reconstruction, body contouring, or microsurgery, enabling them to command premium rates for their expertise. The business model of a specialized medical practice extends beyond surgical procedures. Many successful practitioners diversify their revenue streams by incorporating medical spas, developing skincare products, or creating signature treatment protocols. These ancillary services can generate substantial passive income while enhancing the practice's brand and patient experience. Speaking engagements, medical device consulting, and teaching opportunities further supplement their income while establishing thought leadership in their field. Geographic location plays a crucial role in earning potential. Major metropolitan areas, particularly those with high concentrations of wealthy people, offer the best opportunities for building a lucrative practice. Cities like Beverly Hills, New York, Miami, and Dallas have become hubs for high-end medical practices, where specialists can charge premium rates for their services. However, successful practices can be built in smaller markets by focusing on excellence and creating a strong regional reputation. The modern specialist physician must also embrace the business aspects of medicine. Running a successful practice requires understanding marketing, customer service, staff management, and financial planning. Many physicians partner with business managers or healthcare consultants to optimize their operations, allowing them to focus on patient care while maximizing profitability. The most successful practitioners view their practice as both a medical service and a luxury brand, carefully cultivating their image and patient experience. Technology adoption represents another avenue for increasing practice profitability. Investment in state-of-the-art equipment, while initially expensive, can differentiate a practice and enable more efficient or innovative procedures. Virtual consultation platforms, advanced imaging systems, and automated patient communication tools can streamline operations and enhance the patient experience, justifying premium pricing. For those considering this path, it's essential to recognize that financial success in specialized medicine requires more than just surgical skill. The most prosperous physicians combine clinical excellence with entrepreneurial acumen, understanding that their practice is essentially a small business. They invest in their continuing education, stay current with technological advances, and build strong professional networks that can lead to referrals and collaboration opportunities. The financial rewards of specialized medicine can be substantial, with top practitioners earning several $1 million annually. However, this comes with significant responsibility and demands for excellence. Successful specialists often work long hours, manage complex cases, and must maintain impeccable reputations in their communities. The combination of high earning potential, professional satisfaction, and the ability to positively impact patients' lives makes specialized medicine an attractive path for those willing to make the necessary investments in their education and career development. Lesson 6. Corporate Lawyer: Mastering the Legal Path to Wealth. The legal profession has long been associated with prestige and financial success, but corporate law stands out as one of the most lucrative specializations within the field. Corporate lawyers who reach the pinnacle of their careers often find themselves among the highest-paid professionals, with compensation packages that can easily exceed 7 figures annually. The journey typically begins with admission to a top-tier law school, where aspiring corporate lawyers develop the fundamental legal knowledge and analytical skills required for complex business transactions. During these formative years, students focus on corporate law, securities regulation, mergers and acquisitions, and tax law. Summer internships at prestigious firms provide invaluable exposure to real-world deal-making and help secure post-graduation positions. Upon entering the profession, junior associates at major law firms can expect starting salaries around $200,000, 0 cents, with substantial bonuses based on billable hours and performance. The early years demand intense dedication, often requiring 70, 80-hour work weeks as associates learn to handle sophisticated transactions, draft complex agreements, and support senior lawyers in major deals. This apprenticeship period, while demanding, builds the expertise necessary for advancement. The path to partnership typically takes 8 to 10 years, during which lawyers must demonstrate exceptional legal acumen, business development skills, and the ability to manage large-scale transactions independently. Partners at top firms in major markets can earn between $1 million, 0 cents annually, particularly those who develop strong client relationships and consistently bring in significant business. Beyond traditional law firm practice, corporate lawyers can create wealth through various alternative paths. Some transition to in-house counsel positions at major corporations, where total compensation packages, including stock options and bonuses, can rival law firm partner earnings. Others leverage their expertise to establish boutique firms focusing on specialized areas like venture capital, private equity, or intellectual property law, where intimate knowledge of specific industries commands premium rates. The most successful corporate lawyers often combine legal expertise with entrepreneurial ventures. They may become strategic advisors to startups, taking equity positions in lieu of fees, or launch legal technology companies that address inefficiencies in legal services delivery. This hybrid approach can create multiple income streams while maintaining the security of legal practice. Specialization proves crucial for maximizing earning potential. Areas like mergers and acquisitions, private equity, and securities law consistently rank among the highest bringing legal specialties. These practices involve high-stakes transactions where clients willingly pay premium rates for expertise that can make or break billion-dollar deals. International trade law and cross-border transactions present additional opportunities as global business continues to expand. The modern corporate lawyer must also embrace technology and innovation. Artificial intelligence and legal tech tools are transforming the profession, and those who master these developments can increase their efficiency and value to clients. Forward-thinking lawyers are incorporating data analytics, project management skills, and business acumen alongside traditional legal expertise to differentiate themselves in a competitive market. Building a personal brand through thought leadership, speaking engagements, and publications can significantly enhance earning potential. Corporate lawyers who establish themselves as authorities in emerging areas like cryptocurrency regulation, environmental law, or technology privacy can command higher fees and attract prestigious clients seeking cutting-edge expertise. Networking remains paramount throughout a corporate legal career. Relationships built with clients, fellow attorneys, and industry leaders often lead to lucrative opportunities. Successful corporate lawyers actively participate in professional organizations, serve on boards, and maintain strong alumni connections that can generate referrals and business opportunities throughout their careers. The corporate legal profession continues to evolve, but its potential for wealth creation remains strong for those willing to invest in their education, work diligently through the early years, and adapt to changing market demands. The combination of high base compensation, partnership opportunities, and entrepreneurial possibilities makes corporate law a reliable path to millionaire status for dedicated professionals who excel in this challenging field. Lesson 7. Oil and Energy Executive: Powering Wealth Through Global Resources. The energy sector remains one of the most lucrative industries globally, offering exceptional wealth-building opportunities for those who can navigate its complex landscape. Oil and energy executives consistently rank among the highest-paid professionals, with total compensation packages often reaching into the millions through a combination of base salary, performance bonuses, stock options, and profit-sharing arrangements. The path to becoming an energy executive typically begins with a strong educational foundation in engineering, geology, business administration, or economics. Many successful executives start their careers in technical or operational roles, gaining hands-on experience in exploration, production, or refining operations. This technical expertise proves invaluable when making high-stakes decisions that impact billion-dollar projects and global energy markets. The energy industry's transformation presents unique opportunities for wealth creation. While traditional oil and gas remain significant, renewable energy sectors like solar, wind, and hydrogen are experiencing explosive growth. Forward-thinking executives who can bridge both conventional and renewable energy domains position themselves for exceptional career advancement and financial rewards. The industry's complexity requires leaders who understand not only technical aspects, but also geopolitical dynamics, environmental regulations, and emerging technologies. Networking plays a crucial role in ascending to executive positions in the energy sector. Industry conferences, professional associations, and energy-focused business groups provide platforms for building relationships with key decision-makers. Many successful executives leverage these connections to secure board positions at multiple energy companies, creating additional income streams through director fees and equity compensation. The wealth-building potential in energy extends beyond corporate roles. Many executives parlay their industry expertise into entrepreneurial ventures, founding consulting firms, energy technology companies, or independent production companies. The industry's high barriers to entry and capital-inventional nature mean that successful ventures can generate substantial returns, particularly when backed by deep operational knowledge and strong industry relationships. Risk management skills are essential for long-term success in energy leadership. The industry's cyclical nature means executives must navigate volatile commodity prices, changing regulations, and geopolitical uncertainties. Those who excel at strategic planning and risk mitigation not only preserve wealth during downturns, but often find opportunities to expand operations and acquire assets at favorable valuations. International experience significantly enhances an energy executive's earning potential. Major energy projects span multiple countries, requiring leaders who understand different cultural, regulatory, and business environments. Executives with proven track records of managing international operations often command premium compensation packages and find opportunities to participate in global ventures that can generate substantial wealth. The transition to renewable energy creates new pathways to wealth for energy executives. Leaders who can successfully guide companies through this transformation, developing innovative solutions for clean energy production and storage, position themselves for significant financial rewards. Stock options and equity stakes in growing renewable energy companies have created numerous millionaires as the sector expands. Energy executives also benefit from extensive perks and benefits that contribute to wealth accumulation. These often include executive retirement plans, deferred compensation arrangements, and comprehensive insurance coverage. Additionally, many companies provide housing allowances, private aviation access, and other lifestyle benefits that reduce personal expenses and accelerate wealth building. The future of energy leadership lies in embracing technological innovation and sustainability while maintaining operational excellence in traditional energy sources. Executives who master this balance while developing strong teams and maintaining stakeholder relationships find themselves well positioned to build lasting wealth. The energy sector's essential role in global economic growth ensures that talented leaders will continue to find abundant opportunities for financial success. Lesson 8. Content creator with scale. In today's digital age, content creation has emerged as one of the most accessible paths to generating substantial wealth. Unlike traditional media, where gatekeepers controlled access to audiences, modern creators can build direct relationships with millions of followers across multiple platforms, creating numerous revenue streams that compound over time. The most successful content creators understand that scaling their operation is crucial to achieving millionaire status. This means moving beyond simply creating videos, posts, or articles and building a content ecosystem that generates revenue 24/7. Top creators typically diversify across platforms: YouTube for long-form video, Instagram for lifestyle content, TikTok for viral moments, and podcasting for deeper engagement. Each platform serves as a unique touchpoint with their audience and opens different monetization opportunities. The financial model of content creation is particularly attractive because it combines multiple revenue sources. Ad revenue from platforms provides a baseline income, while sponsorships and brand deals often represent the largest direct income stream. Merchandise sales, online courses, and digital products create passive income opportunities. The most sophisticated creators also leverage their audience to launch physical products, invest in startups, or create subscription-based communities. What sets millionaire content creators apart is their approach to treating their channel as a business rather than a hobby. They invest in high-quality production equipment, hire teams to handle editing, marketing, and business development, and create systems to maintain consistent output. Many successful creators eventually build mini-media companies, with some employing dozens of people to manage their expanding empire. The beauty of content creation lies in its relatively low barriers to entry, combined with unlimited upside potential. While starting requires minimal investment, often just a smartphone and basic editing software, scaling to millions in revenue demands strategic thinking and business acumen. Successful creators must understand audience psychology, platform algorithms, and market trends while maintaining authenticity and creating genuine value for their followers. Data analytics plays a crucial role in scaling content creation. Top creators obsessively study their metrics, understanding which content performs best, when to post, and how to optimize for each platform's algorithm. They use this information to refine their content strategy and maximize engagement, which directly correlates with revenue potential. They also leverage their data to negotiate better brand deals and identify new opportunities for expansion. Building a personal brand becomes increasingly important as creators scale their operations. This brand equity allows them to command premium rates for sponsorships, launch successful products, and maintain audience loyalty even as they expand into new ventures. Many millionaire creators have leveraged their personal brands to launch successful companies, invest in other businesses, or create lucrative speaking careers. The path to becoming a millionaire content creator requires patience and persistence. Most successful creators spent years building their audience before seeing significant financial returns. However, once they reach a certain scale, the income potential can be extraordinary. Top creators often earn 7 or 8 figures annually through their combined revenue streams, with some building net worths well into the tens of millions. The future of content creation looks even more promising with the emergence of new technologies and platforms. Virtual reality, augmented reality, and artificial intelligence are opening new frontiers for creative expression and audience engagement. Creators who position themselves at the forefront of these technological shifts often find themselves with first-mover advantages in rapidly growing markets. Lesson 9. SaaS Product Founder. The software-as-a-service industry has created more millionaires in the past decade than nearly any other business model. The allure of recurring revenue, high profit margins, and scalability makes SaaS an attractive path to wealth creation. Unlike traditional software companies that require massive upfront development costs and complex distribution networks, SaaS businesses can start lean and grow exponentially. At the heart of successful SaaS ventures lies a fundamental understanding of customer pain points. The most profitable SaaS companies don't just build software, they solve critical business problems. Take Salesforce, which revolutionized customer relationship management by moving it to the cloud, or Zoom, which simplified video conferencing when remote work became essential. These companies identified gaps in the market and created solutions that became indispensable to their users. The financial mechanics of SaaS businesses contribute significantly to their wealth generation potential. Monthly or annual subscription models create predictable revenue streams that investors love. The initial customer acquisition cost is offset by the lifetime value of each subscriber, often resulting in profit margins exceeding 70% at scale. This economic model allows successful SaaS founders to build substantial equity and ongoing profits. Technical expertise, while valuable, isn't always necessary for SaaS success. Many founders partner with technical co-founders or outsource development while focusing on business strategy and market fit. The key is understanding your target market deeply and having the vision to create solutions that users will gladly pay for month after month. Tools and platforms now exist that allow non-technical founders to create minimal viable products without writing code. The path to SaaS millionaire status typically begins with careful market research and validation. Successful founders often start by serving a specific niche rather than trying to appeal to everyone. For example, project management software specifically designed for architectural firms can command higher prices and face less competition than general-purpose alternatives. This focused approach allows for faster market penetration and stronger customer relationships. Pricing strategy plays a crucial role in SaaS wealth creation. The most successful founders understand value-based pricing rather than cost-plus pricing. If your software saves a business $10,000, 0 cents monthly in operational costs, or generates $50,000, 0 cents in additional revenue, charging $500, 0 cents or $1,000 per month easily justifiable. Multiple pricing tiers, annual prepayment discounts, and enterprise customization options can significantly increase average revenue per user. Customer retention drives long-term wealth in SaaS businesses. Reducing churn through excellent customer support, regular feature updates, and strong user engagement isn't just about maintaining revenue, it's about building enterprise value. SaaS companies with high retention rates often sell for 10-15 times annual recurring revenue, creating substantial exit opportunities for founders. The venture capital landscape particularly favors SaaS businesses, providing opportunities for founders to accelerate growth while maintaining significant equity. Unlike traditional businesses that might require founders to give up majority control for funding, SaaS companies can often raise capital on favorable terms due to their scalability and profit potential. This means founders can build wealth both through operating profits and eventual exit valuation. Going to market effectively requires a deep understanding of digital marketing and sales automation. Successful SaaS founders master the art of lead generation, conversion optimization, and customer onboarding. The ability to acquire customers efficiently through content marketing, SEO, and targeted advertising while maintaining reasonable customer acquisition costs is often the difference between profitable growth and stagnation. Lesson 10. Building wealth through franchise ownership. The allure of franchise ownership lies in its unique combination of entrepreneurial freedom and proven business models. While starting a business from scratch carries significant risks, franchising offers entrepreneurs the opportunity to leverage established brands, systems, and support networks while building substantial wealth. The most successful franchise owners often develop portfolios worth millions by strategically selecting and scaling multiple locations across different brands. Franchise ownership particularly appeals to those who possess strong operational and management skills but prefer not to reinvent the wheel. The most lucrative franchise opportunities typically require initial investments ranging from $500,000, 0 cents, to several $1 million. But they offer the potential for substantial returns through multiple revenue streams. Quick service restaurants, fitness centers, automotive services, and healthcare franchises consistently rank among the highest performing sectors. The path to becoming a wealthy franchise owner often begins with thorough research and due diligence. Successful franchisees carefully evaluate factors such as brand strength, territory protection, royalty structures, and ongoing support systems. They also assess market demographics, competition, and growth potential in their chosen territories. Many prospective franchisees start by working within their target industry to gain valuable insights and experience before making the investment. Financing plays a crucial role in franchise wealth creation. While some franchisees use personal savings or traditional bank loans, others leverage SBA loans, private equity partnerships, or even franchise financing programs. The most successful franchise owners often develop relationships with multiple funding sources, allowing them to scale their operations more rapidly when opportunities arise. Multi-unit ownership represents the primary wealth-building strategy in franchising. Rather than operating a single location, wealthy franchisees typically expand to own anywhere from 5 to 50-plus units. This scale creates operational efficiencies, increases bargaining power with suppliers, and generates multiple income streams. Many successful franchisees also diversify across different brands or concepts to minimize risk and capture various market segments. The operational structure of a successful franchise portfolio requires sophisticated management systems. Wealthy franchise owners build strong leadership teams, implement robust training programs, and develop standardized processes across their locations. They often create management companies to oversee their portfolio, allowing them to focus on strategic growth while maintaining consistent quality across all units. Technology and innovation play increasingly important roles in franchise success. Forward-thinking franchisees invest in advanced point-of-sale systems, customer relationship management tools, and data analytics platforms. These technologies help optimize operations, improve customer experience, and identify growth opportunities across their network of locations. Real estate strategy often becomes a secondary wealth-building mechanism for franchise owners. Many successful franchisees eventually purchase the real estate where their businesses operate, creating additional equity and rental income streams. This approach can provide significant tax advantages and long-term appreciation potential beyond the operational profits of the franchise itself. Exit planning represents another crucial aspect of franchise wealth creation. Successful franchise owners typically develop multiple exit strategies, including selling to larger franchise groups, private equity firms, or other operators. Some create family offices to manage their wealth and pass their empire to the next generation, while others may choose to take their operations public through strategic partnerships or reverse mergers. The franchise industry continues to evolve with changing consumer preferences and technological advances. Today's most successful franchise owners stay ahead of these trends by embracing innovation, adapting their business models, and maintaining strong relationships with their franchisors. They understand that building lasting wealth through franchising requires a combination of operational excellence, strategic growth planning, and the ability to evolve with market demand. Lesson 11. Private Label E-Commerce Seller: Building Your Digital Retail Empire. The rise of e-commerce has democratized retail entrepreneurship, and private label selling has emerged as one of the most lucrative paths to wealth creation in the digital marketplace. Private label sellers who master product development, brand building, and marketplace dynamics can build multi-million-dollar enterprises with relatively modest initial investments. The fundamental premise of private label e-commerce is straightforward. Identify products with strong demand, work directly with manufacturers to create improved versions under your own brand, and sell them through established marketplaces like Amazon or your own online store. What sets successful private label sellers apart is their ability to spot opportunities in crowded markets and create distinctive brands that resonate with consumers. Understanding product research and selection is crucial. Top sellers use sophisticated tools and data analytics to identify items with high demand, manageable competition, and healthy profit margins. They look for products that solve real problems or fulfill specific needs, often focusing on niches where existing offerings fall short. The most successful private label entrepreneurs don't just copy existing products, they innovate and improve upon them based on customer feedback and market gaps. Structuring relationships form the backbone of private label success. Building strong partnerships with reliable factories, particularly in manufacturing hubs like China, Vietnam, or India, can provide significant competitive advantages. Successful sellers invest time in visiting facilities, negotiating favorable terms, and establishing quality control processes. They understand that product quality and consistency are non-negotiable elements of building a sustainable brand. Amazon's marketplace dominates private label selling, but diversification across multiple sales channels is increasingly important. Successful sellers establish their own e-commerce websites, expand to other marketplaces like Walmart.com or eBay, and even break into brick-and-mortar retail. This multi-tranchal approach not only increases revenue potential, but also provides insulation against platform-specific risks. Brand building separates six-figure sellers from seven-figure empires. The most successful private label entrepreneurs create compelling brand stories, invest in professional photography and packaging, and build engaged customer communities. They understand that brand equity translates into higher margins, customer loyalty, and ultimately business value that extends beyond individual product listings. Supply chain management becomes increasingly critical as private label businesses scale. Top sellers master inventory forecasting, establish reliable logistics networks, and build redundancies into their supply chains. They understand that stockouts can devastate rankings and revenue, while excess inventory ties up capital and erodes profits. Many successful sellers eventually establish their own warehousing operations or work with third-party logistics providers to maintain better control over their supply chain. Marketing expertise sets apart the most profitable private label sellers. They excel at Amazon PPC advertising, social media marketing, and email list building. They understand how to optimize product listings for search visibility and conversion. Many successful sellers also leverage influencer partnerships and content marketing to build brand awareness outside marketplace platforms. The financial potential in private label e-commerce is substantial, with successful sellers often generating profit margins between 25% and 40%. Top performers typically reinvest heavily in inventory expansion and new product development, creating a snowball effect that accelerates growth. Many seven-figure sellers eventually attract acquisition offers from aggregators or larger brands, providing lucrative exit opportunities. The private label landscape continues to evolve, with opportunities emerging in new marketplaces and product categories. Successful sellers stay ahead by embracing automation tools, exploring emerging markets, and adapting to changing consumer preferences. They recognize that building a scalable private label business requires constant learning and adaptation in the fast-moving world of e-commerce. Lesson 12. Angel Investor or Venture Capitalist. The world of angel investing and venture capital represents one of the most sophisticated paths to wealth creation, combining deep market knowledge with strategic capital deployment. These professional investors serve as the lifeblood of innovation, providing crucial funding to startups and emerging companies while potentially generating extraordinary returns on their investments. Angel investors typically begin their journey after achieving success in other fields, having accumulated significant personal wealth that they can deploy into early-stage companies. Many successful entrepreneurs transition into angel investing, leveraging their operational experience and industry networks to identify promising opportunities. The typical angel investment ranges from $25,000, 0 cents, to $100,000, 0 cents per deal, with investors often participating in multiple rounds of financing. Venture capitalists, by contrast, usually operate within established firms and manage institutional money alongside their personal capital. The path to becoming a VC traditionally involves experience in investment banking, consulting, or successful entrepreneurship, followed by an MBA from a top-tier institution. These professionals typically start as associates, advancing through the ranks to eventually become partners who share in the firm's profits through carried interest. The real wealth in venture capital comes from the asymmetric returns possible in this asset class. While many investments fail completely, a single successful exit can return the entire fund multiple times over. Companies like Uber, Airbnb, and SpaceX have generated astronomical returns for their early investors. The key to success lies in developing pattern recognition for identifying promising opportunities and having the expertise to help portfolio companies navigate critical growth challenges. Building a career in this space requires more than just capital. It demands the development of a strong network and reputation within the startup ecosystem. Successful investors often become known for specific expertise in sectors like enterprise software, biotechnology, or consumer technology. This specialization helps them evaluate deals more effectively and provides valuable insights to their portfolio companies. The modern landscape of angel investing and venture capital has evolved with the introduction of new investment vehicles. Syndication platforms allow smaller investors to participate in deals alongside established players. Some professionals start with angel investing through these platforms before transitioning to full-time venture capital roles or establishing their own microfunds. Risk management in this profession extends beyond diversification across multiple investments. Sophisticated investors structure their deals to include protective provisions, board seats, and pro rata rights for future rounds. They actively work with portfolio companies, leveraging their experience and networks to increase the probability of successful outcomes. This hands-on approach distinguishes the most successful investors from those who merely provide capital. The potential returns in venture capital can be staggering. Top-performing VC firms often generate internal rates of return exceeding 25% annually, with the best firms achieving even higher results. Individual partners at successful firms can earn tens of millions annually through management fees and carried interest, while successful angel investors can turn relatively modest investments into substantial wealth through early participation in breakthrough companies. For those aspiring to this career path, the journey typically begins with building expertise in a specific industry or technology sector. Many successful investors start by making small angel investments while maintaining their primary career, gradually building a track record and network. They often join angel groups or venture firms as venture partners before committing full-time to investing. The progression from writing small checks to managing significant capital requires patience, continuous learning, and the ability to add value beyond money to portfolio companies. This profession demands a unique combination of analytical skills, market insight, and relationship-building capabilities. The most successful investors develop an almost prescient ability to identify trends before they become obvious to the broader market. They combine this foresight with the discipline to maintain investment theses during uncertain times and the wisdom to know when to adjust their strategies as market conditions evolve.